expect to see in this situation?
They got to go to the sideline now. It's Nakua. He grabbed it. Was it a catch? The officials are getting...
Man, I kind of like that intro right there. Nakua is probably one of the best wide receivers out there, and I don't know. You ask me, I don't think it was a real catch. I think yeah, both receivers were on the ground, but I do think the previous play was a little ridiculous. That was supposed to be a pass interference, but I mean, it's all good. It's all good. All in good fun. I think they still got a chance of going to the play. I think they are going to go to the playoffs. I think they got to win the next couple games. I don't know. We'll check that stuff out later on. But good afternoon, everyone. Good afternoon. Good afternoon. All 23 of you kind people on YouTube. We got 19 of you on my channel. We got 4 of you on the Wolf YouTube. Congratulations. Thank you very much. You finally made it. I finally made it. I apologize for being late. I apologize. Yeah, I know. I'm late. All right. I get it. But much love, guys. Much love. Happy holidays, guys. Happy holidays, Midwest. Happy holidays, Joseph Alberg. Happy holidays, Mosh Stocks. Oh, I recognize you. I recognize you, my boy, right there. Happy holidays, Midwest, of course. Grimster. What is going on, everyone? Welcome to the show. You know, I got to be honest, there really is not a lot to talk about today, but I will make sure your time is very eventful and very worth, of course, your time. I already wasted 5 minutes or 3 minutes of your time by being late today. I apologize. It is the end of the year, of course, so, you know, why not arrive fashionably late? But we have quite an interesting show today. In fact, I would actually say that, wait, where are my notes at? I always keep all my notes, but this thing's not even updating. My goodness, Sam, you are so unorganized. You are so unorganized showing up for a show, and you don't even have your notes open correctly. Dude, where are my notes? I took a lot of notes for today, and they're all good. I'm not making it up. My notes are here, but I guess I'll just think about it about the top of my head. Yesterday, I was going over a little bit on the reason why I didn't think silver was a good short at all yesterday. I mean, I wouldn't really say that on Friday. Maybe it did create some sort of a local top on Friday, or at least a 48-hour local top. But we could see here, I haven't even checked in the last hour if silver is still up considerably on the day. Let's go ahead and share the chart here. Man, what a crazy game yesterday. In fact, like these last few NFL games have been a little wild here. Where's my screen at? Why isn't this thing sharing? Hold on. I got to share the entire thing, apparently. All right. We could see here that SMCI does not get any love no matter what the news is. Silver is still up about 7%. I think it was up about 10% earlier today, but a very clear signal to not short silver. You probably looked high and mighty this morning, but right now it's probably ripping your face off. Yeah, you know, I mean, there's a few people shorting silver out there. I mean, Chris is shorting silver, and I already told him, like, dude, now is not the time to short silver. But, I mean, he's going to do it anyway. I mean, he's sitting on a considerable amount of gains this year, and I'm sure he's not shorting it in size at all. But, I mean, you know, eventually everyone's going to be right as far as silver goes. I think silver is probably going to make its top sometime soon. I don't think it's going back to, what is it, like $30 in, like, the next few months. But, yeah, it's setting it for a top. So if you got the time, if you want to pay for the premium ahead of time, which is what I was highlighting yesterday, you can certainly do it. Silver futures is just very risky to short here. Like you can easily just get your face ripped off in just a matter of hours, which is what happened this morning, right? So this morning we had silver here looking like, actually it's kind of pulling back a little bit here to the 200 moving average on the 5-minute. But this morning, yeah, it looked like it was going to go down lower, and then it just like ripped people's faces off in just a matter of a few hours. So, you know, that's the sort of stuff that happens when you have something like very high volatility to the upside. It can easily make upward and downward moves very quickly. So, I mean, I really don't, I don't condone shorting things that are just ripping people's faces off. I think it is it is probably not a good idea. I mean, obviously, if you got stops in the game, whatever, but like as far as like options goes, I mean, I don't know why you would short this thing right now. Meta had some interesting news yesterday as far as acquiring a company, Manus. I'll get a little bit into that one later on. We're also going to get a little bit into XAI, what they were doing today, or what with the announcement today that they're going to be making their third data center out in the outskirts of Memphis. We also are going to watch a couple clips on Warren Buffett. This is his second to last day as CEO of Berkshire Hathaway. I think he's still going to be the majority shareholder of Berkshire Hathaway, but I think as far as running the ship goes, it is going to be your boy Abel doing the job. But let's be honest, it's still going to be Buffett. It's still going to be Buffett. Following that, we're going to talk a little bit about Zeta. Like, I know it. Okay, fine. I talk about Zeta every day. Sim, you talk about Zeta every day, but it's like, yeah, I've been talking about it every day because it's like I'm super bullish of stock going to 2026. I think there's a lot of misconception as far as where the marketing business is. Yes, it's a very volatile business. I already highlighted some risk yesterday during yesterday's stream. And, you know, it is important to know these risks, but I think the floor is pretty high for a stock like this. Also, we're going to be discussing, I think that was about it. You know, honestly, I can't even find my notes from that I took earlier. Maybe my notes are on this one right here. Oh, wow. It's on this side of Notion, but it's not on the other side of Notion. We're going to go over the Robinhood prediction market numbers. Our boy Juan Rodriguez, actually, he doesn't even put his last name there, but he provided his input on some numbers for Robinhood as far as the June contracts go. I mean, we have the Super Bowl coming in February, so we got a lot of hype coming with the playoffs game around that time. I mean, if you get these games like we've been getting as far as NFL goes, which is like basically back and forth until like the very last minute, you're going to have a lot of volume on contracts as people want to put in their last minute bets and so on. So we'll see what happens with that one. Excuse me. Also, he touches on the other sports as well. We got soccer, NBA, and so on. So we'll take a closer look at that one. And let's get on with the show. We actually got the FOMC minutes just an hour and a half ago. And did it really tell anything? Not really. I mean, it was just the minutes. You already got Powell's speech. I don't think the minutes really move the markets too much. It gives a little bit of clarity as far as what the other voting members were actually thinking during the meeting. But at the same time, I don't think it really did anything much for the markets. I haven't looked at the CME Fed Funds futures, but let's go ahead and take a look at this clip from CNBC where they're going to basically go over some highlights from the minutes itself. And if I could actually do that right here, man, I am not myself today. I don't even know what is going on here, but let me go this clipperoo right here. Boom, boom.
Minutes to the December meeting showed the rate cut that the Fed, the 25 basis point rate cut, was maybe a closer call than it appeared from the vote, which was 9 in favor of the cut, 2 dissenting against it, and 1 for a 50 basis point cut. The minutes show that a few of those who voted for the cut said they could have supported no change at all, and some wanted to wait for more data. Remember, the government was still they were still getting data from the closed government period there. Inflation risk was seen tilted to the upside, labor market risk to the downside, and what you're going to hear now is a debate between those two sides. Some care more about inflation, others more about employment. Those supporting the cut said it was in line with forecasts for future lower inflation. Now, the committee did appear to agree on the need for future cuts. The debate was about the timing of future cuts. Most judged further rate cuts appropriate if inflation declined over time as expected. Some, however, wanted to keep rates unchanged, quote, for some time to assess the impact of recent cuts they'd already done. Others argued a move to a more neutral policy would help forestall what they were concerned about, a, quote, major deterioration in labor market conditions, to forestall that. Many saw a low probability that tariffs would lead to persistent inflation. That concern about tariffs was diminishing there. Several were concerned, however, that higher inflation would become entrenched. If it feels like I'm going back and forth, it's because that's the way the minutes read. Many expected tariff inflation to wane, but debated when and by how much. Some saw persistent price pressures, however, unrelated to tariffs. The majority of participants noted that inflation is above target for some time and had not moved closer, and some were concerned that the idea of the Fed not being at target would become entrenched and the commitment to the 2% target would be undermined by that. The labor market was seen continuing to soften, but stabilizing next year with appropriate policy. Now, this is a couple interesting facts that we keep talking about on CNBC. when you read the minutes, you see that the Fed itself is seeing this K-shaped economy with strong spending by higher income households, while lower income households are making, quote, adjustments for inflation. And a number were hopeful that higher productivity, possibly reflecting AI, could boost growth without inflation, however, also dampen job creation. So, Brian, I wish I could be more concise about how the committee felt, but the committee's feelings were literally all over the place, Brian.
Yeah, you and I have been doing this for a long time. Steve, normally to your point, I think it's pretty concise and clear. Here's how we feel. It does feel the last few months, and with these minutes in particular, that we know there's dissents. I mean, there's been dissension, literally.
Okay, so just to clarify what he's saying a little bit over here. How do I switch this sucker? All right. Just to clarify a little bit of what he's saying over here. There's a lot of back and forth in these minutes, right? And I would think a lot of this really attributes to the fact that Powell is going to be coming off the podium. So a lot of people really want to float their own boat and try to get that, positive spot. Maybe they don't want the FOMC chair, but, they want to like sit as close to the throne as possible. But I mean, this is the reason why, in my opinion, the reason why the market is kind of like somewhat stagnant here. I mean, if you take a look at the chart of the S&P 500, we've kind of been moving sideways since September. And a lot of this is kind of voiced in with not only the markets as well, but also with the one of the supposedly the greatest economists in the world that's sitting in the Fed chair. But, I don't think anyone knows really where the economy is going, where the market's going. And obviously the numbers show that employment is very scarce right now, that unemployment is ticking up, that inflation is ticking down, that the economy is somehow afloat. We got the K-shaped economy, whatever. But I think a lot of people are kind of concerned here, like, well, what does that mean for the next few months? And I would really take it as no one knows what's going to happen next few months, which is probably part of the reason why the market isn't falling off a cliff and why it's not ripping everyone's faces off, right? I mean, like, yeah, you have your moments where it hits the bottom end of the range and then just rips back up in 2-3% days back to back, but then it just stops after that, right? Like, okay, we broke all-time highs and then nothing's really happened since then, right? We got no follow-through. And I think a lot of that is being voiced also from the FOMC voting members as well in the committee, right? Like there is a bit of back and forth. Inflation's gone. Inflation's coming back. Unemployment's going to tick back down. Unemployment's ticking up. GDP is going to tick down. We are in stagflation. Like whatever it is. Like there's just a lot of this commentary back and forth, and I don't think anyone really knows. And I don't know either, right? I don't know. I'm sticking with micro right now. I'm trying to set myself up for the 90% positivity of the markets going up. Markets are built to go up. They're not built to go down. If they're built to go down, no one would be investing in the stock market. So I'm going to focus a little bit on the micro right now. But let's go back to the video here and let's take a look at the rest of the things they got to say.
But it does feel like it's just a little more loose or a little harder to understand. What am I looking for here?
I think you're hitting it right on the head there, Brian. Let's layer in a couple things here. One, we had the government shutdown. You had the cutoff, essentially, of official data, the data the Fed relies upon. I think that's a backdrop for this whole debate that's probably very important on both sides. You also have this idea that you have these tariffs of uncertain inflation effects that are going to come through. You did have the alternative data showing a weakening in the job market. So I guess, Brian, you remember that phrase? I forget who thought it up, but I thought maybe I did. But if you're not confused, you're not paying attention. Well, the Fed is paying attention to all of this, and I think collectively they're confused. But some are going to side more on the idea of, hey, we need to really worry about the job market, and others are saying, you know what? For 5 years, we've been above target. We need to get this inflation problem under control.
And there's going to be people that go after the Fed for being confused. I will actually be a little more gentile. It's near the end of the year. I can be nice, right? Why not? And it is a confusing time with tariffs and inflation and AI. We don't know what exactly is going to happen. And I actually don't blame the Fed. I would rather have them say, we're not quite sure, versus be like, we're darn sure, and then have it be darn wrong.
You know what, Brian? You're saying this makes me think of one of the things that you do as a hobby, which is to drive race cars, if I'm not mistaken. If you're driving a race car, you need to think about where the race car is going to be in 3 seconds from now, because you're traveling at whatever, 200 miles an hour. if you're driving an oil tanker, you don't have to make those you have to make those decisions earlier because it turns later, but the future is well in front of you if you're going much slower. And I think the situation right now is some on the Fed say, hey, what? Let's take our time. We've cut 175. Let's chill out, take a look at where things are going. And there's a bunch of other folks that say, you know what? We have weak jobs in front of us now, and we're going to take a flyer, by the way, on where the car is going to be, which is higher productivity because of AI and lower inflation because tariffs are not going to come through. It's a bit of a debate about what kind of vehicle you're driving, sir.
Yeah, I mean, he has a little bit of a good point there, right? So we don't know what the actual effects of AI are going to be. I mean, I'll tell you right now, it's going to make things more efficient. I think the question is, how much of a degree of efficiency are we going to get from AI? Are we going to see a massive drop in jobs available in the market because AI is taking people's jobs away or taking people's jobs away? I don't think they're taking jobs away. In fact, I think it's going to create a new subset of skills for workers, which we're already seeing out there. Kill switch engineers are being thrown out there, apparently. But also, how are tariffs going to affect the economy? To be honest, we don't know yet. I think maybe we saw the beginning scare of it. You know, the pendulum always swings very far to one side and then swings back the other. We had the initial scare where it's going to increase and jack up inflation. And then we saw that, okay, maybe it's not going to increase inflation. And now we're at the point where it's like these tariffs could be nullified by the Supreme Court. I mean, who knows at this point? But one thing we do know for sure is that we have the debt ceiling meeting coming up soon at the end of January. And if that doesn't get resolved before then, and I think specifically that has a lot to do with the ACA subsidiaries, which is supposed to be expiring in just tomorrow, actually. We still haven't heard from that one. And that's probably the reason why Oscar has been suppressed down in price right now, because we haven't heard anything about that one. So we'll see. But I think there's a bit of uncertainty as far as where the macro is for the beginning of 2026. Tom Lee seems to think that we're going to have a down quarter in the first quarter of 2026 and then followed by an up quarter in Q3. I would say it's possible for the market to move a bit sideways up until then, but with the sideways action, you can get the rotation more into like value stocks of companies that are more profitable, companies that can weather whatever storm that we have out there. And that's probably part of the reason why a lot of these high growth, high beta stocks that are pre-revenue are not really finding a bid right now because there's a bit of uncertainty in the market. And that's the reason why people are rotating into defensives as well as the mega caps, because mega caps are considered defensive when it comes to tech, because these companies can weather any recession that we really have. I mean, we've had the great financial crisis and most of these mega caps are still around, right? They haven't disappeared yet. So we'll continue to see what happens with that one. But I mean, there's only so much you can talk about the minutes. Here's the speculation a little bit when it comes to commodities. Let me actually pull up the commodity chart here, because I found this pretty interesting. I'm not trying to be like a doom and gloomer over here. I'm not trying to say like, oh, this marks the top of the stock market. But guys, back in 2021, we had a major rally in silver as well. Okay. Nothing close to what we saw today, but silver had a major top here and it kind of drifted lower throughout 2021 and 2022. And if this is true, we have another year of a massive bull market coming ahead of us, because the market didn't top in the beginning of 2021. It topped at the end of 2021, or actually the beginning of 2022, supposedly. And again, not a doom and gloomer. I'm just, it's nice to observe some of these charts here, like how things worked out. I mean, I definitely don't think this is 2021. I think this is 2025. But if we look back here at gold actually topped out. I think it was around the same place that, let's see here. Oh, it looks like gold actually topped out. Made a double top at the beginning of 2022. But I do remember this as well. After the COVID situation, gold went on a massive run and then it just kind of drifted lower. And it's possible. I mean, gold has been on a crazy run lately. And usually when it comes to gold, you don't really have a lot of people selling gold. Like it usually gets deposited into central banks or bought and put into central banks. And it just stays there forever, right? And you can see gold here made like this massive parabolic move, especially up like 13% since mid-October. It's possible gold could just drift down a little bit lower here and go back down to like 3,500. And if that happens, yeah, that's where consolidation would be. And if that happens, well, it's not really going to change anything, right? Like, it doesn't mean that gold's going to fall off a cliff. It just means that it's consolidating a bit. Like, look at this massive range over here, right? Just because this gets undone doesn't mean gold is going to zero, going back to 2000. It just means it's consolidating. That just usually happens when things make parabolic moves. And you can have the same thing with silver, right? Silver can come all the way back down to like these levels over here in 46, and that'll be a major drop, of course, but that can happen over a course of a year. And it can go up, down, up, down, up, down. And anyone who's been buying puts in this could get their faces ripped off still, but a slow bleed per se, right? It's not, you got to be very right when it comes to the silver short trade, especially when you're playing with options. Let's take a look at copper. Copper has actually been making some crazy moves lately too. I don't think a lot of people are really talking about this one. Copper is making a double top situation over here. Now, I'm not going to be bearish copper because copper is needed for a lot of infrastructure build that there actually is utility use for copper, but this is kind of a breakneck rally here, right? Like I mean, it doesn't have to fall now. I'm just saying that the IV is extremely high with a lot of these commodities and everyone's chasing it because there's just no volume in the stock market right now. In fact, the stock market is just pretty much flat, right? Look at this all the way back since the since the Trump China tantrum, right? We're basically flat since then. Yeah, we're up like 1 or 2% in the Qs. Maybe in SPY, we're up a bit higher since those tantrum. Yeah, we're up about like 2% from there, but like we really haven't gone anywhere, right? I mean, yeah, we had this major drop of that, faked a lot of people out, and then we did this over here again, over here too, right? And fake people out, right? And it's just like we're just sitting back up at all-time highs, and VIX is here at 14, right? And historically, when the VIX is low, there's low volatility. You know, like what's the range of ES today? ES, the range is 20 points. That's like nothing. That's like less than a 30 basis points range, right? Any traders who are out there today, you better be really good traders because this is very difficult to trade when you're shorting or longing the indices. I mean, you know, there's a lot of professional traders out there, but some of them are longing or they're day trading individual stocks, which are actually making pretty big moves, right? So you have Zeta, which is basically up. How much is it up since? It's up about 20% since just a couple weeks ago, right? And then you have Amcor doing the opposite. Amcor is down about 14% since a couple weeks ago, right? And then this is actually pretty interesting because Skywater was actually up considerably today, but Skywater is something I was calling out before. I didn't go long it. I wish I went long it, but that's up by 36% from just a couple weeks ago, right? And then do I even need to mention Rocket Lab? Rocket Lab has made a massive move since its lows just a few weeks ago. Rocket Lab went as high as a double, right? So I think this is what traders are looking at. They're looking at the micros, they're looking at commodities, right? Bitcoin has basically been doing nothing, like absolutely nothing for the last month, right? Yeah, it made its big move down. Since then, hasn't really done anything. I would arguably say that this is like a very small move for Bitcoin over the course of a month, right? Bitcoin should be making bigger moves than this, but it's not making any moves at all. So I digress on that one. All right. So tribute to Mr. Buffett. All right. I made a post about a week ago during the weekend. I hope I didn't fuel anyone up. All right. Saying that Pelosi was the GOAT. Okay, Pelosi's not the GOAT. All right. Like, I don't know. I don't want to say that she's an insider or whatever it is. Who knows? You know, I mean, she may have like some power in some of these bills and whatever, but I think she's I think whoever's managing her book, like I don't think Pelosi's out there looking at charts, deciding what to long, what to short, looking at fundamentals. I think she's got a team doing that for her. But I think that office is doing really well in terms of performance. And yes, they are outperforming a lot of hedge funds this year. But I don't think she's a GOAT, right? I mean, we've had a massive bull market for like the last 15 years. Warren Buffett has been at work for more than 5 decades. Warren Buffett's the GOAT. I'm sorry. Warren Buffett is the GOAT. Hold on. Let me just fix my camera a little bit over here. And we're going to do a little bit of tribute. No. I appreciate it, but I am not the GOAT. I do appreciate it though. And I'm going to be very humble in that because I'm definitely not the GOAT, but I will give credit where it's due. There's actually a lot of GOATs on Twitter out there, and they've been doing pretty good. But let's take a look at this Mr. Buffett clip here. Shy Buller posted this morning. And it was actually a pretty interesting clip. Hold on a second. Let's see if I can get it open over here. 1 second, everyone. I will go ahead and share. Oh, Oh, wow. I didn't expect that background music over there.
The worst trade you ever made, and what'd you learn from it?
The dumbest thing I ever did.
Yeah, the dumbest thing you ever did.
The dumbest stock I ever bought, it was early in 1962, and here was this cheap stock, cheap by working capital standards or so, but it was a stock in a textile company that had been going downhill for years. So it was a huge company originally, and they kept closing one mill after another, and every time they would close a mill, they would take the proceeds and they would buy in their stock. And I figured they were going to close. They only had a few mills left, but they would close another one. I'd buy the stock, tender it to them, and make a small profit. So I started buying the stock. And in 1964, we had quite a bit of stock. And I went back and visited the management, Mr. Stanton. And he looked at me and he said, Mr. Buffett, we've just sold some mills. We've got some excess money. We're going to have a tender offer. And at what price will you tender your stock? And I said $11.50. And he said, do you promise me that you'll tender at $11.50? And I said, Mr. Stanton, you have my word that if you do it here in the near future, that I will sell my stock at $11.50. I went back to Omaha, and a few weeks later, I opened the mail.
Oh, you have this.
And here it is, a tender offer from Berkshire Hathaway. That's from 1964. And if you look carefully, you'll see the price is 11 3/8. He chiseled me for an 8. And if that letter had come through with 11 1/2, I would have tendered my stock. But this made me mad. So I went out and started buying the stock, and I bought control of the company and fired Mr. Stanton. And we went on from there. Now that sounds like a great little morality tale at this.
So, I don't know. I mean, when you are the GOAT, you can make mistakes, right? And he's obviously learned from that mistake. He's not going out there and buying stocks that are about to go out of business. Yes, he buys stocks that are of really good value, but not about to go out of business. And he clearly has said that this was a mistake he made. But let's look over the course of time of all the great that he's done. I think what a lot of people do is they look at one mistake one person does, and that's what they signify that person as, right? They center that person around that one mistake that they made, but then they overlook all these other accomplishments that he's done. And the great part is that with Warren Buffett, everyone knows all these accomplishments that he's done. And I would even say a lot of people probably already knew about this situation that he's been in. And clearly there's been more mistakes that he's made. And a lot of those mistakes would be attributed to not buying heavy into the tech revolution that we have seen since the dot-com bubble. But overall, though, what is it, like almost 20% annualized? Actually, let's take a look over here. Annual return of Warren Buffett. He has over 60 years. Warren Buffett has, actually, I'll share my screen here. Over 60 years, he's returned over 5 million%, which is pretty insane. And he has an annualized return, compound annual return of 19.9% over the entire time that he's had Berkshire Hathaway, which is double 10.4% of the S&P 500. Like, come on, guys. That's amazing. And I know a lot of you guys are up triple digits this year. I know a lot of you guys are up maybe quadruple digits this year. But over the course of 60 years, right, or however how long, I think it's been, 1965. So then what would that be? Like 60 years? Yeah, 60 years. Beating that much of a return is pretty insane, especially when you're thinking about compound growth. So if you had, okay, so compound return of, actually, let me get that calculator over here. That's probably not even the best compound interest calculator out there. All right. Initial investment of $100,000. All right. Over the course of this thing doesn't even go to 60 years. All right. Let's just say that it doesn't even go above 10%. This is crazy. Come on. We need a Warren Buffett calculator over here. All right. So investment calculator. All right. 100,000 after 60 years, 19.9% compound annually. We're not going to contribute anything, and then calculate at the end of each month. Calculate it. Okay, maybe 0. Yeah, I mean, if you had $100,000 and you compounded nearly 20% each year with just one deposit, that means that by the end of the 60 years, you'd have over 5.5 billion, or you have about $5.5 billion, $5.359 billion. Can you guys do that with your money? I don't think you can do that. You'd have to invest in the stock market possibly, and maybe you'll return about 20% over the course of the next 100 years. We'll see how technology goes. But I mean, that's Warren Buffett. He is the GOAT. That is truly what makes the GOAT. All right. So hats off to Mr. Buffett. Let's move on to the next segment. We had Mr. Dan Ives discuss his picks for 2026. And I know a lot of people listen to Dan Ives. He's had a lot of good calls lately. I mean, it's been a crazy bull market lately as well, but he's had quite a decent amount of picks whenever it comes specifically to which stocks to buy. And one of those stocks was actually Palantir. He has been one of the early call outs in terms of the analysts with Palantir on Wall Street. Obviously, we had a lot of retail analysts discussing Palantir for quite some time, especially since the single digits. But let's take a look at what he's got to say as far as his 2026 picks.
Picks for the new year, some potential AI plays. Join us now, Dan Ives, Wedbush Securities Global Head of Technology Research, kind of a Magnum PI shirt on. We were, the jacket's muted. You went with the shirt today for this appearance. All right,
sure.
We can do that. Dan, since it's the beginning, we're at the very end of the year, so we always want to, think that suddenly the calendar has anything to do with it. But we are interested in 2026. So you've got some tech stocks that you like, and then it's notable that some are missing from the ones that you like. So I'm just wondering, does that mean that you're negative on the ones that don't make the list, or that you just like the ones that make the list better and they're all going to go up?
Yeah, it's a great question. I mean, look, NVIDIA, that continues to be one of our top names overall going into 2026. But I mean, the reason the five that we picked, Tesla, Microsoft, Palantir, you look at CrowdStrike and, and even Apple, it's about the derivatives of the AI revolution playing out. I mean, that's our whole thesis going in 2026. For every dollar spent on an NVIDIA chip, there's an $8 to $10 multiplier across the rest of tech. And that's why I think those are the names. Those five are the ones specifically going into early part of 26 that I think are going to boom. I mean, that's why we pound the table on those five names.
Exactly. So that you kind of summed it up right at the beginning. You said, look, NVIDIA is one of your favorite names, but it's not one of the five that you mentioned. That doesn't mean that NVIDIA is not going to do well. You said them quickly. So Microsoft, what's the story on Microsoft? Azure?
I mean, look, when you look at enterprise, as you see the movements in the cloud and AI, Redmond, they're really owning that race. I think this is a stock $100 upside. That's why Microsoft sticks out on Azure and AI demand front and center.
Great. Apple, you mentioned quickly, but Apple it doesn't even matter.
You know what? He actually mentioned Microsoft. When I saw that earlier, I was like, wait, hold on a second. He's bullish Microsoft. That's actually very interesting because Microsoft is an enterprise company. They do have the data center build out. They are the second largest hyperscale in the entire world. But they do have a lot of software. It's very interesting that he says that because we haven't seen that massive software move in AI yet. Interesting to see if that happens in 2026.
They're any good at some of these new things. They're just so good at what they do with everything else.
Yeah, and Joe, I think the whole thing for Apple is like, look, they've been on a treadmill 2.5 speed, right? They've been nowhere in AI. But now as we go into 26, we expect a major Google partnership in terms of the spring. Now the consumer AI revolution goes through Cupertino. And I think that is significant. We talk about $75 incremental. The stock is the AI multiple. That starts to increase for Apple. That's why I view that as just a glaring name that sticks out.
If I text someone and it's green, it's like, what's wrong with you? I don't know how other people compete with Apple. The ecosystem is so powerful. At least I'm a simpleton with this kind of stuff, and I just can't imagine trying. You got anyone not have an Apple and not have an iPhone?
Too.
No one. Who has? If you have an iPhone, is it always blue with your text? I'm like a neophyte. Is that the way it works?
I thought there was some.
There's some messages that could be. But if someone, sound like an idiot. But if someone does have green. Is that not an Apple when you're texting them? Is that really?
Well, no, but usually that's why we usually delete them from our text chain, right? I mean, when someone's agreeing, so that's always a red flag.
Okay, I 100% agree on that one. If anyone in my circle gets a non-iPhone or switches to green, because you can actually send green text when you don't have an iPhone. You just switch the data to send messages not through iMessage, through SMS. I kick that person out of the group chat. Like, I don't want to deal with that. I don't need green in my life. My son's favorite color is green. I don't need that in my text. All right, let's move on.
I know. It's just I do so many things, and believe me, I'm a novice at all this stuff. But Apple's just got a lock. How about Tesla? Why is that trading at what's a multiple now? It's about robots.
Well, look, I think the whole story is the autonomous chapters now coming to Tesla, and I think this is going to be the most important year in its history for Musk and Tesla because of autonomous and robotics. And I think we think autonomous is worth $1 trillion alone to the Tesla story. Now Musk, wartime CEO, and it speaks to our view. You know, look, for the first time in 30 years, the U.S. is ahead of China when it comes to tech. And I think Tesla front and center in terms of physical AI. That's why we love that name.
Yep. So they've been bullish Tesla for quite some time. And I would even argue they were bullish Tesla even when it was in the 200s and even when it was in the hundreds and even when it gave those opportunities that I've always talked about. You don't buy Tesla when everyone wants Tesla. You buy Tesla when no one wants Tesla. And when there is the Trump argument with Elon Musk, no one wanted to buy Tesla. When they were about to report their earnings after reporting quarter over quarter and year over year declines in EVs, no one wanted to buy Tesla. It went to $150, and then I don't know. It'll be really interesting to see if we never see below $200 again in Tesla. I know there's going to be a lot of heat from that one, but just look at the momentum of this stock lately. It can't even get below $400. Now, mind you, we are at all-time highs. It can drop pretty low, probably a lot lower than where the market can go if it does pull back, which is what we've seen for the last couple of years. But what if we don't see below $400 in Tesla again? What are we going to see? Are we going to see 500 first, or are we going to see below 400 first? We'll see with that one. But anyways, those were his picks for next year. What was interesting was that he said Apple is going to be a pick for next year. I believe they've been bullish Apple for quite some time, even when it was below $200. So they're sitting pretty nice, of course, with their picks, especially with Palantir. Palantir made a massive move to the upside in the last couple of years. I believe it's up about 10 times. So actually 20 times. So congratulations to those long-term shareholders in Palantir. Let's move on to the next topic. We have over here some news that we received earlier from XAI, or regarding XAI, noted from the information. We had XAI has purchased a building for a third data center outside the city per the information. XAI already operates Colossus, the world's largest AI supercomputer in Memphis. It launched in 2024 with 100,000 NVIDIA GPUs and has since expanded to 200,000. A second 1 million square foot data center site in Memphis, Whitehaven area was purchased earlier this year. The company's goal is 50 million in units of H100 equivalence AI compute, but much better power efficiency online within 5 years per Elon. So Elon is designing his own crowd of AI chips, right? So ASICs, application-specific integration circuits. And they've already announced that they're going to be collaborating with Samsung on these new chips. Is this the year for ASICs? In my opinion, I think this is the year for ASICs. I think that Broadcom, and this is really all dependent if the bull market still stays bullish, right? If the bull market pulls back and if we have like a 20% correction, all bets are off with a lot of tech stocks. You're not going to see tech stocks rip to the moon if the stock market is down 10%. But I do think the bull market's continue. I don't think the bull market's coming to an end. We might get some crazy volatile moves to the downside. And yes, okay, fine. Maybe we might get a bear market where it's down like 20%, but I think that's going to get bought up very quickly. Similar to what we saw last April. Didn't exactly close below the 20% range, but we almost got there and it got bought up within just a couple months. I think that we are going to see a lot of that coming up in the next few years and probably forever, right? You have these computers and algorithms controlling massive amounts of money in the stock market. It's going to make these crazy moves like it does all the time. Today, the VIX is at 14, so maybe not today, but these things can erupt very quickly. So with that being said, I think next year is the year of ASICs, and I think ASICs are going to be the story for the next few years. And I think that Broadcom is probably going to go higher. Tesla, I think, is going to go higher because it's the only public proxy you can have for purchasing shares of XAI without actually owning XAI. You would, of course, have to do it through Tesla. And I think there's a big market here. NVIDIA is definitely going to be a beneficiary of all of this. But I think the biggest beneficiaries as far as stock performance goes, not financials. NVIDIA will always be the beneficiary of this from a financial perspective. But stock performance is different from financials, all right? I think NVIDIA will be able to keep its high margins alive for a long period of time. But I think that as you continue to hand out market share in this massive TAM, NVIDIA might only lose like 10% market share. But that 10% is very big for the AMDs, the Broadcoms, the Teslas, and all those companies around the entire world. It's a very big TAM for them to have. And it doesn't take a lot to move the needle for them, but it will take a lot for NVIDIA. And I think that is a lot of that's already priced at NVIDIA. But I think that if the bull market continues, NVIDIA will continue to go higher. So now, going back to the story, what are they using all this compute for? Whether there's Grok, there's FSD for Teslas, and the more vehicles you sell, they actually did just build out their 9 millionth vehicle, or their 9 millionth Tesla today. Also, you're going to have a lot of the compute that's related to, I mentioned Grok, I mentioned FSD, also with as they start to scale out Optimus and everything else that Elon is doing, right? You're going to need a lot of compute. I don't think the story is really going to end anytime soon. In fact, I would even say there's probably going to be a partnership on the line. And someone actually did ask about that in the audience. What do I think about Iron and Nebius? Thank you, Jorge Del Rio, for the question. I think that it's very possible that one of them are going to create a partnership with Tesla. I don't think Elon's going to do all of it themselves, but it is going to be one of these Bitcoin miners, in my opinion. We just don't know who. Of course, the best candidates I think for in any of these situations is going to be Nebius and Iron. But there is that non-AI stack software build-out, which would be a Cypher or CoreWeave that could be involved in this build-out, right? But I think in this case, you might have one of these four, or possibly even HUD 8. HUD 8's been rallying a lot lately, so has Applied Digital. I mean, it could be any of these, right? I'm not going to put my bet on one of them in a short period of time. I already have my bet on Iron and Nebius. But I do think this whole sector might get a comeback at some point. I don't know if that's going to happen right now. All right. The entire sector already got chopped in half. In fact, let's look at some charts here. Oh, wow. Look at that. The market just closed. So if we look at some charts here, oh man, we got a bit of a sell-off into the close. That's not fun. So we got the Qs over here closing right on the 20-day moving average. So that'd be a nice back test of 20-day moving average. Let's take a look at some of these Bitcoin mining stocks. We have Nebius here at 85 bucks, basically got chopped in half. We have Iron here below $40 again, basically got chopped in half. We have HUD 8 still doing pretty good. Applied Digital has been making some crazy moves lately, but still got chopped in half. Bitfarms is, wow, that actually went down a lot. Cypher is back down to 14 bucks. Core Scientific is back down to $14. CoreWeave is back at $70. So all of that crazy rally that we saw the other day got sold off with a lot of these Bitcoin miners. That's like, don't get too excited with these, right? Me, for my opinion, or this is what I'm doing, is that I usually just buy what I need for these and then just let it run. And when the momentum comes back, that's when I trade options on it. But there's like no momentum with these stocks. Like I would even say like you just got to sell premium when it comes to these right now. Where did my screen just go? Anyways, that's what I was really saying with that one. It's tough to say which one is going to be the biggest beneficiary of it, but we'll see. All right, so now the final segment here that I wanted to discuss are these Robinhood numbers. Let me just pull it up real quick here. All right, so we have, hey, look, it's me. We have Juan Rodriguez. I'm going to put the post over here. Go ahead and follow Juan on Twitter. I mean, this guy only has 3,200 followers. I think he needs a lot more than 3,200 followers. That is like literally not enough followers for the amounts of calculations this guy is doing. Mod me, dude. Oh, what's going on? Nate Dogg is in the house. I'll mod you in a second. I can't do it on the Wolf Financial channel, maybe in my channel at some point, but I'm not going to be streaming from there anymore, but at least for right now. But Robinhood, as he posted on here, he made his predictions for January. Okay. So his bull case is 2 billion contracts traded in January. His bear case is 1.38 billion, right? So I think he posted his number for December. So we didn't really close in December, but this is obviously going to grow. I think he's very bullish for January. What do we have coming in January, right? So the volumes for NBA stayed very strong lately. I've been seeing a lot of betting on NBA myself, but I only bet on football. I don't like to bet on basketball. Basketball is a crazy game, man. I mean, you could literally have like, what was it? I think I was watching the I forget which team I was watching the other day, but they were down like 10 points in the last few minutes, and like they caught up, and then it was OT, and then they ended up winning the game. I think it was the Pelicans versus the Saints. Not the Saints. It was Pelicans versus another team. I forgot the other team. Anyways, NBA volumes coming in. Actually, NBA, according to his chart, is actually the most amount of contracts, which is kind of surprising, but I guess that kind of makes sense because there's so many NBA games that happen. Football, you only have 18 weeks of games, and each team plays, I think, about 16 games in the regular season, and then you have the playoffs and the Super Bowl. So you won't have as much volume because there's not as many games. So that's why NBA has a much higher volume count. December will be about 3 billion. Oh, okay, cool. So a little bit less. Well, let's move on here, and then we'll probably get down to the reason why, unless he wants to post the reason why. But college football, there's only 12 playoff and championship games in January, leading to lower volume expected. Yeah, so college football, you're having your bowl games now, and the championship's going to be on soon. So like that's pretty much coming to an end, and way less games, right? So you have all these teams that played college football, and then it's way less games. And I would even say college football is very risky. I'm not going to lie. I've lost some money playing college football, so I don't want to bet college. I'm only going to stick with the NFL. NFL fewer games if average. Yeah. So NFL, you obviously have your playoffs coming soon, and then you have the Super Bowl. So you basically have like 2 weeks where there are no NFL games for the Super Bowl. And when that happens, there's like no volume. So I would even say for January, this is a pretty considerable amount of volume for having basically no games for half the month. Soccer, new offerings as we get closer to the end of the season. This should drive volume higher in Q1. Makes sense. Tennis, Australian Open, college basketball, volume trend higher as conference begins. Yes, college basketball is becoming pretty popular now. NHL is something that actually has a lot of opportunity in the market because a lot of people don't really watch NFL when you compare it to the NBA. In fact, let's look at the NHL contracts. You have 90 million. So you have 1/9 of the amount of contracts traded for NBA. Right? That's not a lot. But I do think that when bettors bet on NHL, they get pretty aggressive, right? And NHL is like one of those sports where it's like you kind of know who's going to win after the first period, unless like it's like two really good teams. Usually after the first period, you know who's going to win. So those bets tend to come like very early in the game. And I've noticed that for quite some time. So yes, December had 4 weekends of NFL, which is almost 1 billion you won't have in January. Yeah, I know that's true as well. So we'll take a look what's going to happen here. But I mean, still, like this is I could see the bull case happening, especially for January, especially when all the excitement comes. Everyone's back from vacation. People want to enjoy their weekends more. And with enjoying the weekends more, you get a lot more betting. And plus, people are going to put a lot more bets on the table ahead of the Super Bowl as well. Even though the Super Bowl isn't until February, people put their bets on the table ahead of time, right? Of course, if the Super Bowl was in January, you'd have a lot more bets. Actually, when is the Super Bowl? Yeah, it's going to be in February again. So actually, there's only 1 week in February. 1 week in January. You don't have football in. But yeah, we'll take a look and see what's happened there. But kudos to you, Juan, for this chart. And NHL, I believe you will see higher volume given that you won't have other sports. Yeah, that's true. People just want to watch sports and want to bet on them. So yeah, I mean, this is a really good mock-up here. I already posted it on there. Go ahead and follow Juan when you get a chance. Hopefully I have the pleasure to meet Juan in February when Ahmed has a meetup. I'll be there as well for anyone who wants to know. But yeah, I think that it does it for this show today. Quite a short one, but I mean, it is the end of the year. There really is not much going on in the market as far as news goes. And when there's not a lot of news, there's not a lot of coverage. I mean, it's pretty difficult to do, guys, but we're definitely going to kick it off for 2026. Again, I'm going to be streaming exclusively on the Wolf YouTube channel. I'll be streaming part of it on my channel, but then I'll be cutting it short and then bringing that audience over to the Wolf Financial YouTube, mostly because that's where I'm sitting. I mean, me and Wolf, we have a really very good collaboration. I'm going to continue doing the show on there, so go ahead and check that out. And plus, there's a lot of additional content on the Wolf Financial channel as well. So if you're on YouTube, on my YouTube specifically, or if you're on X, go to the Wolf YouTube channel, youtube.com/@Wolf_financial. I will be on there for the future episodes. Thank you